So, welcome to today's deep dive into the wild world of high-risk payment processing. We're looking at a document outlining a specialized gateway called Ivno, and, well, the mission here is basically to demystify this space for you.
Right, because, it's a completely different financial ecosystem than what most people are used to.
It really is. I mean, imagine you're running a perfectly legal, thriving business, say a massive travel booking platform or like a booming monthly subscription service. You just want to process credit cards, but traditional banks treat you like an absolute pariah. They just slam the door.
Yeah, they do. And it's because to a traditional bank, you aren't really a business. You're a ticking liability bomb.
Liability bomb.
Exactly. If you cross Visa or MasterCard's strict 1% chargeback ratio, well, the bank is on the hook. It has absolutely nothing to do with morality, right? It's just pure mathematics.
Good. Let's unpack this, though,
Yeah.
because the bluntness of that math is what's so wild to me.
Yeah.
Grouping a standard coffee subscription or a major airline in the exact same high-risk tier as, like, adult entertainment or an offshore casino.
I know, it sounds crazy.
Right. It seems like a massive market inefficiency. Like, why are they lumped together?
Well, it is an inefficiency, sure, but it really stems from the sheer volume of delayed fulfillment.
Meaning the time between buying something and actually getting it.
Right. Like when a customer books a flight 6 months out or, a subscription auto renews unnoticed, the probability of a dispute just skyrockets.
Oh, that makes total sense.
Yeah, standard processors, they're built for low margin, high volume predictability. They just don't have the architecture to absorb the shock if, say, an airline suddenly folds and triggers thousands of chargebacks overnight.
So the traditional players just opt out entirely.
Right, which creates this massive vacuum.
And if you're a high-risk merchant, you need a parallel financial ecosystem just to keep the lights on. So that's exactly where a specialized gateway like Ivno steps in.
Yes, because Ivno's entire infrastructure is engineered specifically to absorb and, well, mitigate that exact liability.
So what does that actually look like on the ground?
Well, they've got multi-currency support for global reach, real-time processing, all the dashboard analytics. But when we talk about their security toolkit, we aren't just talking about standard encryption or two-factor authentication.
Right, because literally any gateway has that stuff.
Exactly. Ivno relies on predictive, real-time fraud mitigation. For high-risk merchants, fraud protection isn't just a perk. It is essential for minimizing chargebacks so you can actually maintain a viable business reputation.
So it's like they aren't just checking if a card is valid. They're basically acting like a highly specialized digital bouncer.
That is a great way to put it.
Right, like a bouncer who doesn't just check IDs at the door, but instantly recognizes known troublemakers to prevent the bar fight before it even happens. They're running velocity checks and analyzing cross-merchant blacklists in milliseconds.
Yeah, the mechanism here is preemptive network defense. If a transaction looks even slightly anomalous, say, a sudden spike in high-ticket purchases from a specific region, Ivno's algorithms just isolate and block it.
Which neutralizes the bad transaction entirely.
Exactly. And that keeps the merchant safely under that dreaded 1% threshold.
Wow. So the tech sounds bulletproof, but what does it actually take for a business to plug into this system? It can't be easy.
No, it's not a simple click and install plugin. It requires signing up with detailed merchant records, integrating via APIs, and rigorous testing. And you really have to pay attention to the caveats in their FAQs.
The financial caveats are aggressive.
Very. You have variable processing fees, setup charges, complex monthly maintenance costs, and varied contract lengths. You have to evaluate it all really carefully.
Right, and let's not forget the rolling reserve. That detail stood out to me.
Oh, definitely. High-risk processors will often hold back a percentage of your daily processing volume.
Wait, like how much?
Sometimes 5 to 10% for up to 6 months.
Oh, wow. That creates a massive cash flow bottleneck. They're basically using your own capital as a buffer against potential future chargebacks.
Exactly. It forces high-risk businesses to operate with a level of financial discipline that standard e-commerce shops rarely have to even think about.
Yeah, you have to be hyper-liquid just to survive the transition. So for you listening, whether you're modeling out a new subscription venture or just buying a plane ticket for your next vacation, understanding this hidden financial plumbing really changes how you see e-commerce.
It really does. There's this relentless, invisible engine working behind the screen strictly to manage mathematical risk.
Which leaves us with a fascinating scenario to consider. Traditional banks are continuously pushing massive, growing industries out of their networks because the math is just too risky.
Yeah, they just don't want to deal with it at all.
So if specialized gateways like Ivno are the only ones building the infrastructure to handle complex, high-volume e-commerce,
Yeah.
will they eventually become the dominant engines of all online commerce? I mean, maybe the businesses treated like absolute pariahs today will be the ones building the only financial rails resilient enough for tomorrow.